In a remarkable turn of events, Canada's inflation rate has seen a significant drop to 2.9% in January, signaling a potential shift in the economic landscape. Finance Minister Chrystia Freeland has acknowledged this decrease, which marks a departure from the previously higher rates that have characterized the country's economy in recent months.
Inflation in Canada fell to 2.9% in January. That's down from 3.4% the month before, and down from its peak of 8.1%.
The decline from December's 3.4% to January's 2.9% comes as a welcome development for policymakers and citizens alike. This cooling of inflationary pressures aligns closely with the Bank of Canada's target range, suggesting that the stringent monetary policies implemented may be bearing fruit. Despite the positive news, the Bank of Canada has maintained a cautious stance, holding the key interest rate steady at 5%. The central bank has expressed its intent to observe sustained declines in inflation before considering any rate cuts. This approach underscores a commitment to ensuring long-term economic stability and avoiding premature policy reversals that could destabilize the recovery process.
Canada added 41,000 jobs in February. That was more than double market expectations. Today, 1.2 million more Canadians are working compared to before the pandemic. Wage growth has outpaced inflation for the past 12 months for the past year.
Economists had anticipated a slight easing to 3.3%, but the actual figures have surpassed expectations, providing a glimmer of hope for an economy that has been grappling with high inflation for an extended period. The drop is attributed to price pressures easing across various sectors of the economy, including transportation and food, which have seen considerable slowdowns in inflation rates. Finance Minister Freeland's statement comes ahead of the federal budget plan set to be revealed on April 16. The budget is expected to focus on measures that will bolster economic resilience and address growth concerns amidst the global economic slowdown. As Canada navigates through these challenging economic times, the government's fiscal prudence and the central bank's monetary policy will play pivotal roles in steering the country towards a path of sustainable growth and price stability.